Friends, and welcome to this conference. With me are from the management side, Ashish, our CFO, and our marketing head, Minal. We will start by telling you what exactly transpired in the third quarter and what do we expect in the days to come. We all are aware that economic conditions in the country continued to be subdued. There were strong headwinds both in the industrial sector as well as in the construction sector. Many of the consumer goods have really not grown significantly, but we were fortunate because our base A is small and B, we had taken a lot of initiatives to expand our customer base. During this quarter, we were able to clock a revenue growth of about 20% over previous year, same quarter. And this 20% constituted of two components. In industrial, we had 16% growth, and in decorative, we had around 23% growth. This growth was primarily by acquiring new customers as well as by getting some old customers. If we see quarter on quarter also, we were able to get around 12% growth. This growth primarily came in industrial front. The Q2 was slightly bad for the industrial part because of the rains. A lot of industries, particularly in the pipe sector, steel sector, they don't do all that well. So on the revenue side, we had a decent growth. And so far as the profitability is concerned, we were able to maintain our EBITDA plus situation which we have been having for last 2 quarters now, Q1, Q2 also. We would have been slightly better position, but we decided deliberately to take on some expenditure on the marketing front, on the branding front. So this quarter we started branding to begin with. We had a small expenditure of around 4 crores in branding. That's why we couldn't really increase our EBITDA significantly. But for that, our financials slightly improved because of the higher revenue. Going forward, we are expecting revenues to continue to the growth path. Year on year, we expect our growth to be around 25 to 30%, as we have been mentioning earlier, both in terms of volume and in terms of revenue. First 9 months, we are clocking around 29%. Hopefully, year end also, we should be near about that itself. Our next target, having achieved EBITDA plus for 3 quarters, is to go for cash positive. So we are trying to achieve cash positive as early as possible. A couple of good things are happening in the company. A, our team has stabilized now and we have got a pretty good team on all fronts. B, our sales have been growing faster in areas where our plant capacity is there, but our sales were low like West and South. So while the overall sales has been growing around 25-30%, in West and South we have been able to achieve around 45 to 50% growth, which is a positive thing. Another positive has been that the Nasik plant, which was under construction since September of 2018, got fully commissioned, and we were able to produce around 35 to 40% of the capacity in Q3. So I think these are some of the positives we had. Our costs are almost under control, our fixed costs are almost under control. But for employee cost, where we are of course increasing our cost, because an increase in employee cost also is mainly because of the sales people. Otherwise, our cost on account of all other areas is fixed, is not increasing. All other costs we have been able to keep under control. So with control cost, increased revenue, and limited marketing expenditure, we will try our best to come to cash positive at the earliest. Thank you, and now I like you to ask any question or answer. Myself, my colleague Ashish and Minal both are here to answer the questions. Thank you.
Thank you very much. We will now begin the question and answer session. Anyone who wishes to ask a question, you may press star and 1 on your touchtone phone. If you wish to remove yourself from the question queue, you may press star and 2. Participants are requested to use handsets while asking a question. Ladies and gentlemen, we will wait for a moment while the question queue assembles. A reminder, you may press star and 1 to ask a question. The first question is from the line of Ashil Shah, an individual investor. Please go ahead.
Congratulations on a good set of numbers. Just had two questions. One was, what was the industry growth quarter on quarter that you guys saw for this Q3?
See, based on whatever results have been published by the majors, including Asian, Berger, Nerolac. So, year on year, we are expecting growth of 7 to 8%. As compared to the previous quarter, I think the growth has been around 5%.
Okay, thank you. Second question was with regards to the plant that you guys have in the south. Was there any reason that the utilizations went down? Was it because Nasik was catering to the same customers?
You are right. Hitherto, since the Nasik plant was not there, supplies from south used to be shifted to both west and east to some extent, and now Nasik having come, the Nasik is feeding west as well as some part of east. So the production in our Chennai plant has slightly gone down.
Okay, got it. Thank you. Congrats again on the numbers.
Thank you. Anyone who wishes to ask a question, you may press star and 1. Next question is from the line of Ranjan Jain from Nirmal Bang Equities. Please go ahead.
Yeah, it's Ranjan Jain. Thank you for the opportunity, sir. Sir, I would just like to know about your marketing, sales and marketing expenses. You are saying that you have started with this year. So what is the outlook going forward? Are you going to increase that, or it would stabilize at the current levels?
So, till we become cash positive, we will not spend too much and conserve our resources. So, on an annual basis, our expenditure on advertisement and branding will continue to be very limited, maybe at the same level or even similar levels. We are not planning any expansion till we become cash positive. Once we have surplus cash available with us, then we will increase our marketing spend.
And your target of becoming cash positive, can we expect by next year end?
We won't wait that long.
Okay, that's helpful. Sir, in terms of the market, you're saying that your west and south is growing faster, but north has always been your key point or key strong point. So how it is growing, and are you trying to lose market share there? I mean, are you not trying to? Are you losing market share there because the growth seems very less if I just adjust for the west and south growth of 45%?
So, no, growth is not less there. So, the base of west and south is very low. Okay. So, even at 45% also, the total amount is less. In north, we have been growing at around 20-25% now, even now. And east, we have been going around 15 to 17%. And the reason for east being low growth is because our freight cost is very high, either from Chennai or from any other plant. But because all other places plants are local, we are focusing on the local plants.
Is it right to say that 50-55% would be coming from north?
Growth in north will be around 20-25%.
So the percentage of revenue?
Percentage of revenue currently is around 40-45%. It will continue to be around 40% in the days to come.
Sure. Okay. Thank you so much, sir.
Thank you very much. Anyone who wishes to ask a question, you may press star and 1. Next question is from the line of Naitik Modi from OHM Portfolio. Please go ahead.
Yeah, thanks for the opportunity. Sir, could you please give me the numbers for inventory, debtors and creditors?
Of course. See, our inventory on an average basis is around 75 to 80 crores.
Okay.
And our debtors are typically around 110 crores.
And the payables?
Payable, which is basically the creditor, I think creditors normally are in the range of 75 to 80 crores again.
Okay, fine. And could you give me the capacity for the 3 different plants?
So you see, we have set up the 3 different plants. Each has a capacity of around 2,000 KL. So on an average, the capacity will be around 6,000 KL. But at Nashik, still we are not have the environmental clearance for complete 2,000. That clearance is still for 1,000 only. So we cannot make. So even though the capacity is around 6,000 KL, our environmental clearance is around 5,000 KL only.
Okay, all right, fine. And sir, do you see requirement for further capital for growth for our company?
We do not envisage any further capital infusion, either way of equity or by way of loan in next 6 to 9 months. We have sufficient capacity with us, and there is no capex also required. We have sufficient resources to take care of the working capital requirements. In view of the growth, we are planning 25-30% year on year. So I don't see any need for capital infusion at this point of time.
So what are the debt levels as of December end?
It's around, I think, 120 to 130 crores.
Okay, and how do we intend to bring it down? Any timelines that we have in mind?
Only one way. When I make cash positive, it will slightly come down. So I will say it won't come down. Only possibility is in case my insurance money comes. So at this moment, within next 6 months to 8 months, I expect around 20-25 crores to come from my insurance. To that extent, that will come down the moment that money comes.
When is that expected?
So I am expecting within next 1 month around 8 crores because that paper is almost at the highest level. The second around 15 to 20 crores I expect in 6 to 8 months because that process is long. That is still at a surveyor stage and filing because it is a government insurance company. It may take some time.
So total amount you said is how much?
Let us see how much they give. Our claim is very high, but I expect around anywhere between 20 to 25 crores.
Okay, of which you are saying 8 is expected in a month's time.
Within a month, and 17 to 20 I think may take 6 months to 8 months.
Okay, fine. So by probably end of second quarter, mostly everything should come in.
Yes, it should come in.
So all of that would be used towards debt repayment or would be used towards working capital for increased sales?
I don't see requirement in working capital that much. I think most of it will go towards debt because our working capital needs we will take care from the current working capital we are employed.
Okay, fine. Thank you, sir.
Thank you. Anyone who wishes to ask a question, you may press star and 1. Next question is from the line of Sachin Shetty, an individual investor. Please go ahead.
Hi, sir. Congratulations for your good set of numbers.
Thank you.
Most of my questions is answered. Just I want to know, sir, so now the crude oil is come down. So how it would be beneficial for your upcoming quarter? And what strategy plans you have keep in mind to reduce your debt? That I want to know, sir.
So you are right. Actually, crude prices, if you really see over a period of 9 months, they have been hovering around $60 per barrel for quite some time. So there has not been much of a change. Normally what happens is whenever crude goes up or goes down, there are half of our product or 40% of our products are based on crude, and all those products, all the paid companies, they pass on the increase or decrease to the extent possible to the consumers. Since the prices have been stable for last 9 months, there has been a slight up and down movement, but overall the prices have remained stable. We feel the prices in future also will remain stable. So we don't expect any changes in our prices or having any impact on us because of the minor movement of crude. So far as debt is concerned, I don't think our debt will come down significantly without the help of profits. So profits, once they start coming, obviously they will help us in reducing our debt. And second is insurance money, which we expect in next month something and within 6 to 8 months something. So out of 120 to 125 crores that we have on the books, I expect that to reduce by around 20-25 crores in the next 6 to 8 months. Rest will remain as it is.
Okay. Thank you, sir.
Thank you. Next question is from the line of Vivek Kumar from Shiv Sagar Investments Private Limited. Please go ahead.
Good afternoon, sir. Can I ask what is the realization for your industrial and decorative paints per liter, and what is the EBITDA margins you expect from there to stabilize in long term?
So you're asking about the price of industrial and decorative paints?
Yeah, realization per liter.
Realization. So you see our average realization for both quality of paints, decorative as well as industrial is concerned, is in the range of 100 to 110 rupees per liter. That's the average. So as you will be knowing, Shalimar paint is primarily in economical range. We are not very much in premium or super premium or luxury brands, even though we are trying to enter that in the limited manner. So in both industrial as well as decorative, the prices in the decorative is around 100 to 110 and industrial maybe around 120 to 130 rupees per liter.
And what is the EBITDA margins over long term, like 8 to 10% you foresee for the future on revenues?
Well, currently, as you see, we are making hardly any EBITDA because of the low volumes. But yes, we expect next year we are targeting an EBITDA level of 7 to 8%. And going in the long run, definitely it will be between 10 to 12%.
Any chance to increase the realization rates with respect to the branding you have, like this 120, 130 can move up to like what levels?
So you are 100% right. Obviously, our attempt will be to increase it, and slowly it will be inching upward. But currently, our focus is on increasing the revenue, and since we have to increase the revenue, our focus will not be so much on the margins per se. So margins or our average price may not increase. We will try to increase our volumes more than the margins because we have a lot of underutilized capacities.
So basically above 500 crore turnover, everything will come in EBITDA will increase at a higher rate.
Of course, the moment we cross 500 crore top line, everything will fall into place. Our EBITDA will be good. Our net profit will also start coming. So I think we are all working toward that goal that we should have 500 crore plus situation, and then things will be. Shalimar Paints will be a normal company, and then onwards, of course, there will be no limit. Then we can grow up really fast.
You were seeing your this decorative paint business moving revenues higher above industrial in times to come. What is the mix you see?
We will try to expand both industrial as well as decorative by more than 25% each year. We will try to increase both decorative and industrial. We will try to make both decorative and industrial grow by more than 25% next year also.
Okay, sir. Thank you.
Thank you. Next question is from the line of Govind Sahu from India Nivesh Portfolio Management. Please go ahead.
Good afternoon, sir. Sir, our ramp up in production and sales has been below our expectation and what has been guided by the management in earlier calls. So, can you throw some light on why this has happened?
So if we see our growth in revenue in the first 9 months, it has been around 30%, or 29%, I think, to be more precise. And we were expecting a faster growth, but as you are aware that the country's GDP has been growing much slower this year as compared to what we were having earlier. Earlier, we used to have a GDP growth of around 7.5%, and there was expectation that will continue in this year as well. However, it has come down from 7% to 5%, and the major setback has been in construction and infrastructure, where a lot of paint is used. Secondly, a lot of industries where paints are used, particularly pipe industry and corrosion-prone industries, there has been a marked slowdown. So these are the two factors because of which construction and concerned industries that our growth has been limited to 29 to 30%. You would also perhaps be aware that the three companies who have declared their results, Asian Berger as well as Nerolac, combinedly they have reported a net revenue growth of almost negligible. As against every year they used to have 10 to 15% revenue growth. So you will observe that the paint industry as a whole, which used to grow around 12 to 15% on an average, has been hardly growing from 5 to 7% in this year. And that obviously has impacted us also. So it is both a phenomena of the industry as a whole and also is a phenomena where we had our own limitations. So this is so far industry is concerned, but within the company also we had certain limitations. As you are aware, before January 2019 when we got the right issue money, we were really short of cash, and because of that a lot of difficulties and problems started creeping in the company. It has taken us almost a year to clean them off. Our basic focus in the last 1 year was on improving the operations, which we have done to a large extent. So I will say that a significant aspect of the lesser growth would be environmental, but a significant part again is because of our internal issues which we have tried to resolve in last 1 year, and we have been able to do much better in now.
Agreed, sir. Sir, second question is related to our expenses part. So what we have seen is that both employee expense as well as other expenses have there is a, I mean, the incremental have incrementally grown this quarter. So is it just because we have built up the expenses in anticipation of growth, but because of the macro situation, growth is not coming, and thereby front-ending of some expenditure has taken place, or there is some one-off, or how do you explain that?
So are you there?
Yes.
If you see, our employee expense have grown by 12 to 13%, and our revenue also, if you see, on quarter has grown by around 12%. So employee expense has grown just in the ratio of our revenue growth, and these are mostly sales employees. And of course, we have also started one plant in Nashik. There has been some increase because of the Nashik plant. So far as other expenses are concerned, as I mentioned to you, we have taken up a small branding exercise by way of advertisement, Har Rang Khoobsurat, and that Har Rang Khoobsurat has taken some khoobsurati by way of some money as well.
Agreed, sir. Okay. Thank you, sir. I'll come back in the queue, sir.
Thank you very much. Next question is from the line of Rushil Selarka from Pioneer Wealth Management. Please go ahead.
Hello. Hello.
Yes,
Yes, sir. I just wanted to know that why we have degrew the production in Q3 in Chennai plant. What was the reason?
So it was a deliberate reason. We started a Nashik plant, and we wanted to start the Nashik plant, and whatever markets were being served earlier from Chennai, primarily in west and some part in east, we shifted to Nashik to save on freight. Okay. So basically, the decrease is only because till the time Nashik plant was not there, we were meeting these requirements from Chennai.
So, sir, can we get a current capacity utilization of each plant?
Definitely. So, as you know, we have got 3 plants. Our largest plant is in Secunderabad. Secunderabad is almost always remains at around 80% in general, and so there is no issue with the Secunderabad plant. So far as Nashik and Chennai are concerned, because there is the sales figure are still lower, so they normally operate between 35 to 40%.
Okay. Okay, sir. Thank you.
Thank you. Next question is from the line of Ashil Shah, an individual investor. Please go ahead.
So just wanted to touch on the employee expenses and other expenses part again. The 10% increase in employee expenses includes both the sales staff increase as well as the new employees that you would need to run your Nashik plant. Going ahead, in order to increase the utilization in Nashik and Chennai plants, are you expecting any more employee expenses on that front, or from now on it will mainly just be sales employee expenses?
now it will be only sales employee expenses. Chennai plant is almost fully operational. As you know, in any industry, the senior staff is there common for all the facilities, and so it doesn't increase with the increase in production. But sales people have to, we have to have more sales people because we want to enter into more territories.
Got it. Thank you. And how much do you expect the sales employee expenses to go going forward? How much do you expect it to increase?
So I will say if the sales grow by around 25 to 30%, the sales staff expense should grow by around 15 to 17%. So there will be slight reduction, but almost it is in ratio.
Got it. And if you can give a breakup as to how much approximately of employee expenses would be sales as of now, sales expenses?
So I won't have a very good estimate, but I think our sales expense typically is around 30-35% of the total employee expense.
Got it. Thanks for that.
Thank you very much. Next question is from the line of Naitik Modi from OHM Portfolio. Please go ahead.
Yeah, thanks again. Mr. Gupta, now that you are the MD of the company, does it mean that now you have no role with the APL Apollo anymore?
I continue to be on the board of APL Apollo as Vice Chairman, but yes, my operational roles have got limited. Now it's more of a strategic role where I am involved in the primary strategy making and decision making. So to that extent, I am still involved there, but day-to-day working has reduced significantly.
All right, sir. Thank you.
Thank you. Next question is from the line of Shikhar Mundra, an individual investor. Please go ahead.
Hi. So just wanted to understand our strategy, as in since we are growing faster than the market. So what is our strategy? Are we giving more incentives to dealers, or are we giving are our price lower than our competitors? So
you are right on both sides. When giving discounts or our prices, they are still lower than the large players like Asian, Berger, etc. We have to keep our price lower because we are still entering the market, and secondly, we aren't spending too much on the branding. Having said that, paint is one industry which doesn't run only on price. There are a host of other things which have to be associated with the, other than the price, and we are focusing on that. So the differential between us and our competitors in terms of pricing has not seen any significant change in last 7-8 months. We have been maintaining the difference which we used to have, which is in the range of 3 to 4% perhaps in most of the products.
Okay.
However, we are focusing on other aspects of marketing, including servicing, including contact with the customer, including influencers. So those are the things where we are focusing, which does not really involve selling it cheap, but which involves serving it better, having a better relationship.
So as we gain the market share and as we gain some scale, so do we expect this pricing differential to decrease, or we plan to keep it as it is?
I think for a year or so, we may maintain the pricing difference. I won't say about 0.5% or 1% here and there, but on average we'll be maintaining it because we, as I mentioned earlier also, our focus is on revenue growth. We have spare capacity significantly in both West and South, and we will try to ramp up our revenues, and if we have to ramp up our revenues, my scope of improving my margins or reducing the gap with our competitors reduces. At the same time, I will say wherever an opportunity will arise, we will definitely try to reduce the difference.
And when we gain market share, so is it that we are trying to compete with the big players like Asian Paints, or are we trying to gain market share from like other small paint companies like us?
You are right. It will be mostly from other smaller companies, and there are a large number of companies which are still smaller than us. So there are companies which are like a cottage industry, small scale sector, and those people. So the most of the market share comes from them. It is difficult to take market share from the larges.
Oh, that's right. All right. Thank you. That's it from my side.
Thank you. Next question is from the line of Harsh Dhawan from Centrum Portfolio Management Service. Please go ahead.
Yeah, hi sir. You mentioned that 4 crores of branding expenses earlier. So I just want to know, is this 4 crores an ongoing thing, or it was just a one-off thing for this quarter?
It's not a one-off thing. It is a continuing process. We started this process somewhere in the month of in the Q2 to limited extent. It's only slightly gained pace in last quarter. So in branding advertisement, since we don't spend too much money, there will be some spikes here and there. But generally, expense to the extent 8 crores will be there every year. So it is not a one-off thing.
Understood, sir. Understood.
Harsh, do you have any follow-up question?
No, that's it.
Thank you. Next question is from the line of Karan Sharma from Credent Capital. Please go ahead.
Thank you, sir, for the opportunity. So actually, you have guided that Shalimar is exploring many opportunities to import raw materials directly from China and Korea. So have we started procuring raw materials from there?
So I will not say exactly from which countries we are getting. Yes, we are started importing it. Earlier we were not importing at all. So now we have started importing it, and I will say that in the current 9 months, our imports have been much higher than the imports in the 9 months of the previous year. These imports are from different countries, including Korea and other such countries.
Okay, sir. Thank you, sir. My another question is, sir, if SBI has already reduced our interest rate from the 13.5%.
So State Bank was charging a very abnormally high rate from us earlier at around more than 15%. We represented, and I am happy to inform you that I think last month they agreed to reduce it to 13%.
Okay, sir. Thank you. Thank you, sir.
Thank you. Next question is from the line of Ashok Shah from LFC Securities. Please go ahead.
Thanks for taking my questions. Sir, as earlier plan, does the thing is going as per the plan? Because you had told about 2 years in analyst meet regarding market share and how you are going to invest and do everything and put Shalimar on track.
I will say that yes, things are going exactly as per plan. There could be timeline differences, which obviously one cannot say that by what time what will happen. But as you see, already we have reached EBITDA plus. Now we are going to reach cash plus, and very shortly we will also be reaching net profit plus, and then we will be talking of EBITDA margins, which are industry average of 10 to 15%. We will be reaching there also. So I think we are already on track. Quarter after quarter we are improving ourselves, and I mentioned 2 years. I am sure out of that 1 year is already passed. Within a year or maybe maximum 2 years, we will be at that stage.
And regarding this Nashik plant, what's the claim submitted?
We had submitted 2 claims. One was for loss of profit, and second was for destruction of the plant. Out of that, so far as loss of profit is concerned, I think the surveyor has recommended around 18 crores. So far as the loss of the plant itself is concerned, the surveyor is still doing the calculations.
So how much it's a claim submitted totally? 18 crore plus plant claim.
So far as plant claim is concerned, we have submitted a claim of around 40 crores.
40 plus 18 crores. So it's a 58 crore claim we are submitted.
Yes.
Okay. Thank you.
Thank you very much. Next question is from the line of Rajat Pandey, an individual investor.
Hi, sir. I just wanted to get a sense of how is our brand recall in the areas we are operating, since we are such an old brand. And secondly, where do we see ourselves in the next 5 years? What is the roadmap exactly? Thank you.
Hi, this is Meenal here. So where brand awareness is concerned, our focus is mostly towards the influencer. So we understand that when we start targeting a consumer, it will need tons of investment, which we as a business are not, at this stage to do. So we will be focusing on the painter and the contractor community in the short term.
Having said that, we are not discounting consumer connect completely, so we'll be focusing on cheaper mediums, for example, a digital sort of a campaign for consumers. But our primary and most, all the efforts and initiatives will be focused towards the influencer, which is the painter.
Right.
And I see myself sticking to it at least for the next 3 years, and as and when the business stabilizes and we have more bandwidth and investment capability, then we will start targeting consumers. So while we have invested a little bit in the campaign, but honestly it's mostly targeted towards a channel and towards a trade, and bulk of our communication effort had been to establish ourselves in the localities and cities where we're present, and we have a little bit of distribution, so that it becomes easier for the sales team to expand in those areas.
Right. And is there any 5-year goal that we have thought of that this is where we want to reach, not in terms of marketing, but as with respect to sales or probably market share that we are planning to have in 5 years on those lines?
So currently our market share is low. It's even lower than 1%. And, with the efforts we are doing on the influencers and painters, as well as on the industrial front, we hope to increase our market share in the next 5 years to more than 2%.
Fine. That will be all, sir. Thank you.
Thank you. Next question is from the line of Ram Krishnan from Equity Intelligence. Please go ahead.
Hello. Yeah, thanks for the opportunity. Sir, what is the percentage of oil-based paints and the water-based paints?
So typically, most developed countries have more of water-based and less of oil-based. So industry normally works at around 70% water-based and 30% oil-based. Since our company is still small at that level, or a startup in a sense, so our oil-based is more. I think our oil-based is in the range of around 35 to 40%, and water-based is around 50 to 60%.
Thank you. That's all for me.
Thank you. Next question is from the line of Rajat Sethia from Vriddhi Capital. Please go ahead.
Hi, sir. So just wanted to understand what is the revenue potential of our current capacities?
With the current capacity and no capex, and whatever bought in I am taking currently from market, I can cross 800 crores. With a little investment, we have the capacity. Little investment means as low as 5 to 10 crores. We have the basic infrastructure in place to take it to 1,000 crores.
And that investment amount would be in the range of?
Within 5 to 10 crores if I spend.
5 crores. Okay. And at that scale, whenever you achieve that, what kind of EBITDA margins do you think is the bare minimum that you should be able to generate?
10% is a bare minimum EBITDA margin we can generate at that level.
Okay. And finally, do we require any more external equity financing?
I will try my best not to go in for further dilution. I'll try to manage within the resources. However, if required, then maybe 1 year down the line we will look at options. But I will try my best not to dilute.
Okay, got it, sir. Thank you.
Thank you. Next question is from the line of Govind Sahu from India Nivesh. Please go ahead.
So thanks for another opportunity. So, sir, more on the transformation journey, I just wanted to track on quarter to quarter you do explain how you are developing the supply chain and production and other things. So I just wanted to have an update in terms of the distribution. Branding, Meenal gave an update, so that was very helpful. But in terms of distribution, in terms of product innovation, product development, and other things, if you can just throw some light, it would be really helpful, because as you know, we are in a transformation journey and will remain in this stage for another 1 year or so.
Sure. So on the distribution front, currently we have around 32 depots. we are focusing on improving our services in the same depots and with a little expansion only. So we have been able to improve our services to a large extent in last 6-7 months. That's why we see that since almost September, our revenues have been pretty consistent. As we mentioned to you, we are focusing today more on our facilities, our services, our quality. On the quality front also, I'm happy to share with you that our quality has improved significantly in last 4 months. Whereas earlier we used to have a lot of quality complaints. Last 4 months have been more or less steady. There has hardly been any quality complaint. On the industrial front, the quarter on quarter also we have got significant improvement in sales only because the industrial people have been able to appreciate our quality. So if you see Q on Q, my growth in industrial is around 23%, whereas decorative is only 7%. And this is a kind of, for me, a certificate of quality. So on quality front, on distribution front, both there has been improvement. Now my focus will be on cost. So till now, since we were more on quality and supply chain, we were not so much bothered about cost, but now that both have stabilized, we'll be working on cost. And that will be the mantra going forward to achieve our cash positive, apart from revenue growth.
So just one follow-up on this. So all these 32 depots have now stabilized, or are there some more changes which you foresee in it? Because in the past 1 year, you have done a lot of changes and appointed new depots and substituted a lot of C&F agents and all those things.
I will say the process is still continuing. So there are still hiccups in some of the depots, and we are trying to work on it. But so currently all my depots are giving good service. But then good is not sufficient. When I am competing with the large organizations, I am trying to excel in that. And my second focus in changes in the depots are reducing my cost. So next 6 months, I hope to reduce my supply chain cost significantly. Currently in supply chain, my cost is much higher than my competitors. So I have to bring it down.
And sir, on the dealer footprint, where are we? Is it going as progress? Are we adding? We are able to add number of doors, or we are? What is the situation there?
I would say that every month I am adding significant number of new dealers, perhaps 100 to 150 dealers every month we are adding new, maybe even more. And so also industrial front, every month couple of customers get added to my list. And at the same time, I am making sure that customers or the dealers whom I add, they are good people in payment as well. So as you would be knowing, in many of the consumer industries, one of the problem is payments. So my focus is again on ensuring that my payments come on time. So I'm not just increasing my dealer base or my distribution. I'm focusing on good people.
Great, sir. And lastly, sir, can you comment about the throughput per dealer, because that is also one area where we are lagging behind the industry, and it has been a cause of concern for you also in the past.
You are right. It is pretty low. We are a new entrant with many dealers. See, we had a very checkered history till beginning of 2019, because we were never supplying in time. Not 2019 beginning, even middle of 2019, we were never supplying in time. We were not sure. People were not sure. Neither supply was sure, nor quality was sure. So we last 6-8 months only things have stabilized. So we are at a very nascent stage so far as our share in each dealer house is concerned. So my average sales to each dealer is around 60,000 to 70,000 rupees only per month, which is pretty low. It has to cross a figure of around 1 lakh, but it may take a year or two before it happens.
Thank you, sir. Thank you so much for your insightful answers.
Thank you very much. Ladies and gentlemen, as there are no further questions, I will now hand the conference over to Mr. Ashok Kumar Gupta for closing comments.
So I must thank each one of you for participating. It was very wonderful, and I am really delighted to have answered all your questions. I will just say that the things are on the right track. We are very happy with the progress we have made in last couple of months, and but there's a lot to be done yet. We are still far away from what we wanted it to be, but I am sure within 6 to 8 months we will be almost near to where we are expecting it, and from there onward it will be growth as usual. Thank you so much for your participation.
Thank you very much. On behalf of Shalimar Paints Limited, that concludes